Hello traders and welcome to another video review. Today is Tuesday, July 25th, 2023. Let's take a look at the Forex economic calendar for today. German sentiment and business climate index is scheduled for release at 10 o'clock. Business expectations, current assessment, and IFO business climate. All of this data will be released soon, so euro might have some kick after this data are released. CBI industrial trends orders are scheduled for release at noon. Those data are from the UK, and during the New York session we got manufacturing sales from Canada, last reading 1.2%, so not that great. HPI composite data from the US is scheduled for release at 3 o'clock. At 4 o'clock, you got the major release of today, the consumer confidence from the US. And then, of course, we got the 5-year note action at 7 o'clock and 10:30, API weekly crude oil stock change. So, pretty intensive day, plenty of the data. Everyone will find something for themselves, from the market that they trade. And we are going to take a look first at the euro dollar because of the German IFO data release. The euro dollar is now trending down from the highs located at the level of 1.1276. So this is the major technical resistance, swing higher than the technical resistance. Unfortunately for both, the market is still moving lower, and it's approaching this technical support 1.1012. It's a very important technical support, which is just below the technical support at 1.1027. So this zone is the key zone in the short term for the market participants, because any breakout lower would immediately indicate a weakness of the euro dollar, a further move towards the technical support located at 1.0839. We broke below the 50 a long time ago, and we broke recently below the 100 periods moving averages. This is 4-hour chart. So right now the local low was made at the level of 1.1061. We are trying to bounce because the market hits the extremely oversold market conditions, and now it's trying to move a little bit higher. So we will see how that one will go. Normally this kind of a bounce during that kind of a movement to the downside is very, very shallow. Maybe the level of 1.1119 or 1.1109 is hit. Those are two intraday technical resistances. There's one more, of course, which is much more stronger, and it's located at the level of 1.1140. 5, very close to the 50 periods moving average. So the outlook for the euro dollar remains bearish. However, slight pullback or a bounce might happen today. The IFO data from the Germany might trigger a bigger movement to the upside if they are better than expected, or way better than expected. Okay, so that's the euro dollar. Let's find out what's going on the US dollar to the Japanese yen. Now we are looking at this chart because just recently we got the very nice movement to the upside. So let's just take a look how much did we retrace already of this wave down that ended at the level of, let me just take a look at the level of 137.26. So we retraced 61%. Just take a look at this, guys. We retraced 61% of the last wave down. Well, almost, yeah, something like this is needed here. 142.10 is the 61% Fibonacci retracement level of this wave to the downside. Now we got some sort of the dodgy candles printed after the bounce from the 50 periods, 100 periods moving average. So there is still a chance that after extremely overbought market conditions are hit, the market will return to the downtrend and will continue with this movement to the downside. However, please notice the fact that the trend line here is rather far away, because that was a very aggressive pullback. So even if we copy this line and we will make some sort of the corrective channel, you can see that it might not be that that easy for the market to come back to the downtrend. So please keep an eye on the Fibonacci retracement channel and how the market will play this retracement, because if we break to the upside, then all we have to do is to wait for another swing high. And the last one was at 145.10, and of course it will act right now as the technical resistance, but you know, it will be challenged very, very very quickly. Why? Because if we zoom out, you can clearly see we are in the uptrend. Okay, so that is big correction, fine. The biggest during this last move to the upside, fine, but it's not the last wave to the upside that was made. So that's a nice correction, some sort of the bounce. Maybe there will be another wave to the downside, so we will have the wave A, the wave B, and potentially the wave C, okay? But if the 61% is violated, then the bulls will try to challenge the last high and break even higher. When we switch to the daily, you can see straight on that this up move is still ongoing, all right? So that's why we are looking for this level so hot. Another market we are going to take a look at because of the Canadian data is, of course, the US dollar to the Canadian dollar. Let's switch to the 4-hour chart, a little bit lower time frame for the intraday trading. And what do we have here? As you can see, it's a kind of a strong movement to the downside, targeting the lows at the level of 1.3091, so that's our support. And of course it all started from the highs at 1.3386, so that's our swing high and the technical resistance. And right now we are trading below 150 periods moving average, so the market is kind of a, let's just take a look, kind of a challenging this local trend line. Let me just maybe make a channel from this. Let's see if that movement here was inside of the channel. Some side of the channel was made. So we got the bearish flag pattern that occurred on the 4-hour chart of the US dollar to the Canadian dollar. We are now testing the yesterday's low, roughly around the level of 1.3147. Any breakout lower, we are going to test this one, and we are then below the channel, below the lower trend line as well. So there is the technical resistance. Let me just point it out so we will know where we are. There you go, 1.3242. Without breaking above this level, we cannot say that the market is returning to the uptrend. Momentum negative, challenging yesterday's low at the level 40, so there is still room to the downside. There is still room to the downside on the chart as well. So in the case of the coordinated effort of the bears, we might see a kind of a new local or even swing low below 1.1391, and the data from the Canada might trigger increased activity on this market very soon. So it's kind of important for you guys to keep an eye on this market. And last but not least, let's just take a look at the Bitcoin. Let's just take a look here to see what is going on. Well, we definitely broke below the technical support located at the level of 29,556. We have the new low at 28,880. So the market of the Bitcoin is starting to break to the downside. The next target for the Bitcoin is located at 28,446. So this up move here, this impulsive movement to the upside is now completed, and the market is correcting this very nice increase. As you can see how many percent that was. I guess it was significant amount of the percent, because that was 28%. So we gained 28%. We will see how much we will retrace right now, how much we will correct of this 28% movement from the lows of the middle of the June 2023. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.